All right, today we're going to dive into a pretty cool trading system. The whole idea is to find these predictable little patterns that pop up right after the market goes a bit haywire. So let's get into it and see how it all works.
If you're a trader, you know the feeling, right? It's just information overload. You're staring at dozens of charts, your eyes are glazing over, and you're trying to catch these tiny opportunities that vanish in a heartbeat. So how on earth do you cut through all that noise and actually find a signal worth trading?
Well, the system we're looking at today has a really specific answer for that. It's all built around this one core idea called the aftershock. And we really got to break this down because, honestly, it's the key to the entire strategy. Okay, so it all kicks off with this really fundamental concept in the currency markets, three-currency parity. It sounds complicated, but it's not. Just think of it like this. Getting from US dollars to Japanese yen should cost the same whether you go direct or if you hop through the euro first. A to C should equal A to B to C, right? And most of the time it does. But every now and then things get a little out of whack for a split second. And that temporary misalignment, that's what this system calls a distortion.
Now this is the really important part, so listen up. This is not about that super fast, high-frequency triangular arbitrage where bots are trying to scalp that initial distortion in microseconds. No, this system does something different. It focuses on what comes next, the aftershock. It's like the ripple effect, that predictable little overshoot or lag that happens when the market corrects itself. So you're not chasing the explosion, you're looking for the convergence that follows.
Okay, that sounds great in theory, right? But how do you actually spot these aftershocks in the wild without going cross-eyed staring at charts all day? Well, that's exactly where the main tool in this system comes into play. It's designed to do one thing really well: filter out all the junk and shine a spotlight on these potential signals. The scanner's whole job is, well, compression. It takes the entire chaotic market, all these different currency groups, all these time frames, and squishes it all down into one single clean view. Right away, that's a game changer. It cuts down on that screen time fatigue and lets you zero in only on the setups that actually have some statistical promise.
And here's how it tells you where to look. There's this feature called Nowcast. And what it does is it takes all this complex technical analysis and boils it down to a simple letter grade: A, B, C, or NG for no grade. Think of it like a heat map. If you see an A or a B, that's the system telling you, hey, look here, there's a higher probability that this thing might snap back to its average. Now, it's not a crystal ball, it's not a guarantee, but it's an incredibly powerful way to prioritize your attention.
So, you've got a promising technical setup, an A grade. Looks good, right? But hold on. There's another really crucial step. You have to make sure you're not walking into a trap because you missed some big news or a fundamental shift. Let's see how this system handles that, how it builds in a quick sanity check.
This part is actually really clever. You see an interesting cell, let's say it's an A or B, and all you do is click on it, just one click. The scanner instantly creates this perfectly structured prompt for an AI and slaps it right onto your clipboard. The whole point is to bridge that gap between the chart in front of you and the story behind the price action. Central bank policy, big economic events, all that stuff that's easy to forget in the moment.
From there, you just pop over to something like ChatGPT, paste in the prompt, and boom, you get what is basically a super fast blind spot check. It spits out this concise AI short report that sums up the key fundamentals and even gives you an overall grade on whether the story actually aligns with the technical setup. It's a quick, final check before you pull the trigger.
All right, so we've seen the individual parts, right? You've got the tool to find the signal, and you've got the quick check for context. So now let's put it all together and look at the actual workflow, the repeatable process this entire system is designed around.
And the workflow is designed to be super simple and easy to remember. It's just 3 steps: scan, check, catch. First, you scan the market for those high-potential A or B candidates. Second, you check that setup with the quick AI context review to make sure you're not missing anything. And finally, you catch the trade, turning the setup into a structured entry with defined exits and risk management.
So you can see how all these pieces come together to form a professional toolkit. You've got the scanner, which is your big filter for the whole market. Then there's the catcher, which is the specialized tool for actually executing the trade. And there's also another tool called LiveGap, which is more for learning. It lets you literally watch the distortion happen in real time. The idea is you can kind of build your own toolkit depending on what you need, but that core workflow always stays the same.
And all of this really leads to a bigger, more interesting question, doesn't it? When you look at a system like this, it kind of makes you think, maybe the future of trading isn't so much about trying to be a genius who can predict the future. Maybe it's more about having a really solid, repeatable process, a system for filtering, for checking your blind spots, and for executing with discipline.
What do you think?